Joining me now is Justin Reid, the president and CEO at Troilus Gold. Great to see you. Thanks for coming in.
Thanks for having me today.
So the big milestone for Troilus recently was the feasibility study for the Troilus mine in Quebec. Now, Tim Lee covers your company, Red Cloud analyst. He saw the document and he said this looks pretty robust. And some of the highlights include 22-year life of mine. It's low cost. It's about 43% larger in terms of the estimated resource compared to the PEA in 2020. So from your mind, what are some of the highlights of this the feasibility study?
Yeah, I think it really was a robust study. It's a culmination of 5 years of work, 350,000 meters of drilling, which is one of the largest drill programs in Eastern Canada. And at the end of the day, the 22-year mine life, firstly, is only representative of 6.7 million ounces equivalent of our 13 million ounce resource. So that's really the starter, if you will, in 22 years. So it's a generational scale asset. Production averages about 300,000 ounces equivalent. And when I say equivalent, 80% gold, 20% copper, rule of thumb, over that time. But peak production, year kind of 4 to 9, is over 500,000 ounces. And that puts it in a category of the top producers in Canada, which the scale is certainly important when we're looking at financing, partnerships, and the path forward. I think one thing that isn't really regarded but very important is the content of copper. The copper market, besides just gold, is incredibly bullish right now. We're a copper concentrate producer. It's in incredible demand. There's a global deficiency, and it provides a lot of leverage to us as well. So really, billion-dollar capex seems like a lot, but for this scale of asset, it isn't. We've inherited and upgraded over $500 million in existing infrastructure, so the capital intensity is quite low. So size, scale, capital intensity, and room for future expansion are kind of the real highlights.
All right, so 80-20 gold, copper, you're prioritizing high-grade gold, but let's talk about the copper equation, especially as it relates to Quebec's commitment to critical minerals. They really are the province that's pushing that.
Sure, I mean, great point. We are right now the only copper asset in Quebec permitting. So essentially, we're the next asset in line. There is no other copper production. And it is a critical mineral within Quebec. Everybody talks lithium, but realistically, copper is just as important. And so we meet all those requirements, and that definition from the Quebec government likely facilitated why Investissement Quebec, the case, FTQ, Sidex, Esta James Bay, 20% of our register is the Quebec government. And they're providing a lot of support because you're right, the electrification of Quebec is the priority of the existing administration, and we fit into their plans.
Now, the Troilus team continues to drill. You've discovered this new zone called West Rim. What more can you tell us about that, Justin? But also, can you give us a sense, you've kind of hinted at it as well, how big this resource ultimately could be?
Yeah, so 13 million ounces on 350,000 meters of drilling. The more we drill, the more we find. Troilus is a belt, it's not an asset, and we have 500 square kilometers. The West Rim is interesting because we actually didn't mean to hit it. We were coloring our drills to try and hit our X22 deposit at depth.
You gotta love those accidental zones you come up with.
I think they were all accidental, but we've put out a number of releases. Our last and Lee's written about them. The one yesterday was 22 or 23 meters of almost 1.7 grams from surface. The key here is within 150 meters of the edge of the pit we're proposing. It's about 40% higher grade than the average mine grade. So in any kind of startup situation or return on invested capital, higher grade early means quicker payback and higher NPV. It is part of a 4-kilometer geophysical trend that extends the strike length of all of our deposits. We have about 5 holes in it. We have more to come to the market shortly, and it provides an opportunity to potentially put higher grade in early. That's probably best case scenario. Worst case scenario is that, our 13 million ounces is going to grow by another 2.5 million ounces, depending on what the drilling shows. So great target. Is just like we've seen at everything else at Troilus. The previous operator, and it was Inmet Mining from 96 to 2010, they put the mine into production. It was a base metal company trying to get the gold multiple in the market, and we've seen lots of examples of that historically. But it was a very undercapitalized mine. All their money went to Cobre Panama and La Cruces in Spain, which has got a lot of headlines lately because of social issues.
Right.
So Troilus was historically undercapitalized. And so a lot of what we're finding was the fact that they just never got around to it. And so I think there's a lot more to see.
All right, very good. Now, you said before that Troilus is sort of similar in terms of their trajectory, so to speak, to Artemis, in that it's similar size, similar tons, similar grade, and you're maybe a couple of years behind. Can you elaborate on that? Because you're talking about trying to follow a $2.7 billion market cap company, basically.
Yeah, I don't even think we're 2 years behind anymore, but Stephen Dean has done an incredible job there. The resource is incredibly similar. We're a little lower strip, actually. We have more infrastructure there, greenfields build. They are permitted, and they are funded, and they are under construction. I think first pour is, very shortly, if not early next year. And when I look at Troilus, not just Artemis, but you can go back to the original Osisko at Malartic. You can go back to Detour. These low-grade bulk tonnage deposits, they're not sexy. You don't have the high grades like Great Bear and others did. So it's about systematic de-risking with the resource, with the reserve, with the feasibility study, with the permits, the EIA, and then through funding. So we've delivered the resource, we've delivered the feasibility, and luckily in an incredible gold environment and copper environment, you'll see from us a number of de-risking events, which we will just slowly unlock the value, and just like Artemis did. So we're on the same trajectory. It's just going to take very focused work.
And Tim Lee, in his recent report, did make the point that you just made, that the Troilus mine is similar to Malartic at the same stage, Detour at the same stage, and that it could be desirable for a major. So this may be premature to ask this question, but what's the end game? Build it out some more, find a buyer. Could a buyer knock at the door tomorrow again, or is it too early to even get into that?
I mean, you can roll the dice. There's lots of opportunities. We're 70% institutionally held. We're not a retail name at all. And so our institutions, and we have very large supportive long-term institutions, they're not going to roll over at a premium in this market at this price. What we've certainly seen is that a number of similar builds recently. Greenstone of Equinox, they partnered with Orion Mine Finance. Cote of IM Gold, they partnered with Sumitomo. Osisko at Windfall, they partnered with Goldfields, and they just were taken out.
Right.
Greenstone of Equinox has just consolidated as well. These type of assets are very attractive to majors because of size and scale, right? They don't really care about a 100,000 ounce producer. It doesn't move the needle for a Barrick or a Newmont or a Goldfields or who have you. Troilus would. And in this market, Troilus is really about cash flow at the end of the day. And so from our perspective, we have the ability to move this forward, and we're well advanced on project financing as an individual entity. The most accretive thing for our shareholders would be to bring in a partner, and we're working on that right now.
Okay, lastly, Justin, can you give us, against the backdrop of the nice gold market we see right now and the environment, the landscape, what are some of the catalysts investors can expect going into the rest of the year and into 25 as well? And maybe to sort of summarize the investment case and what you've been talking about here.
Sure. So catalysts are pretty simple. You'll see some more exploration from us. Troilus doesn't need more ounces, but you're going to see more ounces and probably some better ounces. A lot of our work is focused on the environmental permitting and on the permitting in general. We've been permitting for 3.5 years. I don't think a lot of the market understands what that entails. So our ESIA will be submitted before the end of the year, and then that moves us into kind of the final permitting stage. So with everything aligning, we hope to have all of our permits in hand by the end of next year, which is, if you think about it, from acquisition with 1 million ounces to permits in hand ready to construct if we can get it by the end of next year. We could be in first production within 10 years, which in mining is basically a sprint. It's an incredible achievement. You'll see detailed engineering. We're dewatering now. You'll see the potential project financing and or partnerships. So there's a lot of major catalysts which continue that de-risking theme we talked about earlier. As far as summary of our investment thesis, 13 million ounces and growing, 22-year mine life and growing in Quebec, $500 million in inherited infrastructure, which keeps the capital intensity low. And ultimately, when you dive into our model, you dive into Tim's model and the analyst model, Troilus at the current gold price today will generate over $250 million US in free cash flow every year. That's what interests potential partners, potential acquirers, and ultimately the shareholders. And I think we've got everything laid out to deliver that.
Nice summary and update. Thanks, Justin.
Thanks very much.
All right, good stuff. Justin Reid, President, CEO at Troilus.